I will now discuss an important aspect of the local securities industry: collective investment schemes. A collective investment scheme, or CIS, is a way of investing money alongside other investors in order to benefit from the inherent advantages of working as part of a group. Some of the advantages associated with investing in a CIS include access to the services of a professional investment manager who can assist you in choosing investments that are better suited to your personal investment goals. The ability to diversify your investments, which can assist in reducing your level of risk exposure, and a reduced cost of investment as you can benefit from economies of scale. That is, the cost is shared among other investors. This diagram shows how collective investment schemes work. Investors pool their money in a CIS which is managed by a fund manager. The fund manager purchases securities based on the investment objective of the fund. These securities in turn generate returns for the fund which will be given back to investors after the fund manager deducts their fees. Some of the more common fees associated with CISs are as follows. Management fees. These are fees charged by the investment manager or fund manager and trustee. Distribution fees. These are fees that are charged for distributing the units or shares of a CIS. And administrative and legal expenses. These are charged to offset the operational expenses that are incurred during the day-to-day operations of the CIS. The fees associated with CISs can be found in their prospectuses. Collective investment schemes are valued based on its net asset value, that is, its price per unit or share. The net asset value, or commonly called NAV, is calculated based on the value of the securities held in the CIS on a specific date or time. It can either be fixed or floating. A fixed NAV means that throughout the life of the CIS, the price per unit or share will not change unless otherwise agreed to by the unit holders or shareholders of the CIS. A floating NAV means that the price per unit or share would change depending on the value of the securities held in the CIS. There are many types of CISs that are available to the investing public. The most prevalent in Trinidad and Tobago are equity funds and fixed income funds. Equity funds primarily invest in equities. Depending on the strategy, the fund either invests in local or foreign equities or sometimes a combination of both. Fixed income funds. Fixed income funds invests in fixed income securities. These can be bonds, certificates of deposits, and treasury bills, to name a few. As of January 31st, 2016, there are currently 65 funds operating within the local CIS industry with total assets valued at approximately $48 billion. To recap, we have discussed what are securities, the type of securities, which include bonds, equities, securitized instruments, and CISs. This brings us to the end of our 5-part series on the type of securities that are regulated by the Trinidad and Tobago Securities and Exchange Commission. Check our website at www.investucatettt.com for educational tips to help you become a more confident investor.